Hello, hello, everybody. Thank you all for tuning in to another Founding Titans Startup Ecosystem Series webinar today. We have Anthony Abney with Bronze Valley, and we're going to be discussing empowering the underrepresented within the startup ecosystem. And so I want to give a little bit about myself, as well as give Anthony the chance to talk a little bit about himself and Bronze Valley. To start everything off, I am Gabriel Rucker, and I'm the CEO and co-founder of Founding Titans. We are creating a community-focused relationship optimization platform, and we're building that to help pre-seed the Series A startups with finding the right connections and resources for their businesses. And I'll go ahead and throw the links for everything that we have in the chat. Our wait list is currently live right now. We really appreciate if you guys actually want to get help with your resources and connections, or if you're a founder that really wants to make more impact within the community and within the startup ecosystem, definitely make sure you join our wait list. And also for all of those startup development organizations and other individuals that help out, ranging from communities, VCs, accelerators, all of that, definitely make sure you sign up for that today. And I want to make sure that I kick this off to Anthony. And also, before I kick it over to him, I want to give a special shout out to Daryl Frater for actually having you on for his office hours that he hosts every Friday. If you guys don't know about those, I'll also make sure that I link his information in the chat as well. He has office hours each week with VCs to really have founders pitch for their 1-minute pitches and be able to get some feedback that's really relevant to the stage and industry that they're in. And so, yeah, let's kick it off, Anthony. How are you doing, man? And what is it called? If you want to tell us a little bit more about yourself.
Yeah, absolutely. Thank you, Gabriel, for having me here. Really appreciate it. A little bit about myself. So I'm originally from Philadelphia. Got my start in venture capital back in 2017. I helped to get a program off the ground for underrepresented founders out there. And then I also worked the largest venture capital firm by volume, Ben Franklin Technology Partners. So I had an opportunity while I was there to do some portfolio. And now I am principal at Bronze Valley. Bronze Valley started back in 2018. To date, we have made 39 investments, and at the pre-seed and seed level, and that's across 15 states, industry agnostic, but the majority of our companies are B2B, healthcare, and fintech.
Awesome, man. Love it. Yeah, so let's go ahead and jump into some questions here. Let's go ahead and jump into the questions really fast. So for navigating limited access to capital, so how can underrepresented founders overcome the ongoing challenges with limited access to venture capital when it comes to the funding gap that currently persists?
That is the $1 trillion question right there, Gabriel.
Yes, it is.
Yeah, no slow roll. Just let's ask the
Yeah. Let's jump right in, man. Let's make sure everybody stays tuned in.
No, that's a great question, honestly. So it is very difficult to raise venture capital. Period. Just as a founder, it's just difficult. The more traction you have, meaning revenue, users, how far your product has been developed, the more traction you have, the more chance you'll be able to get investors. And there's different stages of investors depending on where you're at from a business perspective. If you're very early, revenue hasn't come in yet, or revenue is light, you have a higher probability of raising money from friends and family, high net worth individuals, angel investors. Those are typically folks who will write you a check because they like you as a founder, right? And they think that um, you can get to the next step, you can get to the next stage in this business. Then once you have some traction, um, that it's there, you show that you have product market fit. Then typically you'll get some of the institutional investors that will take a chance on an earlier company. But yeah, I think what can really help founders to overcome um, barriers to entry is get a network, get a community of folks, and build your tribe. That looks like investors, subject matter experts, people who can connect you to customers. Really develop your community, that social capital. Develop it before you even start to raise money, and build those connections, build those relationships that people get comfortable with you. They know you, and they can, over a period of time, they can see how you are building your business, how you're conducting yourself as a founder, and how you're making traction and progress. So if you allow people to see and build that trust with you, build that rapport, that's going to give you a higher probability of raising money. There's never any guarantees, of course, and it's very difficult to raise venture capital because there's certain metrics that a venture capital firm is looking for that a lot of businesses just don't fit those metrics. They can be good businesses, but they just don't necessarily fit that return profile that a venture capitalist is looking for. So
Yeah.
I can keep going, Gabriel, but please ask your.
Yeah, no, for these questions, we always want to make sure that like we give the detailed answers. Like we go off on a question for 20 minutes. I feel like that provides more value to the founders than us giving, like any anything that's like run of the mill or generic. Like we want to dive into something, we can definitely just dive into it, even if we only talk about one question the entire time. And so, yeah, because I mean that is the biggest elephant in the room for how founders can really overcome those challenges, especially. I mean, the gap continues to exist, especially for women, people of color. I mean, I know the statistics around especially Black founders in and out because I experience it pretty much every day, especially with the facts that we've been raising ourselves. And it's something that's highlighted a lot with what we're building with Founding Titans, to the point where people have asked me directly, why don't you just build this for underrepresented founders? And the point of all of that is, if we only include people in the room that are currently supporting these founders, the statistics will remain the same. We have to make sure that we're also inviting new people into this fold that might not be necessarily writing checks for these individuals, and making sure that we find ways to adapt. Because especially after everything that happened with, Fearless Fund, and, especially after George Floyd, where there was a huge influx in people really funding these initiatives. And then it kind of fell off. We've seen it with really everybody, from people that said they wanted to back women's, people that wanted to back just LGBTQ, or Black founders, or any of the other subsections, Latinx. All of it kind of has taken a dip in 2024. And so it's really, all of us coming together to figure out, and there isn't one magical right answer. I've been to 5 or 6 different, talks probably in the last 3 months, just about this topic alone, with people that are, in Austin, Atlanta, Vegas. Like, everybody talks about this, and we're all trying to figure out ways to navigate it. So I don't want anybody to think in this call that like we're going to magically find the solution to solve it right now. It's really just about starting that dialogue and continuing on with that dialogue, so that we can, and really also pairing that dialogue with action.
Yeah, absolutely. I mean, I think to your point, This is a daily. It's a daily thing. It's not just like a one-time solution that can be offered. It's a commitment to.
I think your audio might have cut out. Yeah, it's still out for me. I don't know.
Is it good now?
Yeah, it's good now. Yeah, I don't know what happened.
Oh, okay, sorry about that.
I know you're good.
I apologize. No, feel free to ask the your next question.
Yeah. Next question. Yeah, let's jump right into that. So let's talk about actually breaking through those traditional networks, right? So what are some strategies? We talked a little bit about it, but let's dive in a little bit more for the strategies that minority founders can adopt to navigate, the traditional venture capital networks that they may not already have access to. Like basically, how do they branch into, talking to a VC if they don't already have that network?
Yeah. A lot of times it's just about showing up, right? If you show up to events that investors will be at and you network and you meet folks, then that's a good way to start to build those relationships. But I would also just throw out there, it can seem obvious, but sometimes it's not obvious to everyone, is that you want to be ready for what you're asking for. So if you're fundraising and you're raising a $500,000 round, and you want to start reaching out to investors and things like that, you need to be ready. Have your data room ready to go. Have a polished presentation. Have a deck that has an appendix, and then have an abbreviated deck that's just something you can email out to folks and they can look at it real quick and get a good sense of what you do. So really preparation, I think, is key. Like if you come prepared and you make yourself available, meaning you're going to the events, but you're going to the events prepared, and you have a really good idea of what you want to do in terms of how you're going to grow this business, how you're going to manage it, what your vision is, what milestones you want to hit. Like, be ready for questions that investors may have, right? So if you want to start building your network, making these connections, just be ready. So there's plenty of resources online where you can find out what questions you should be ready to answer, and come prepared with intelligent answers. And if you don't know something, it's really important to just say, hey, I'm still looking into that. I'm still figuring that out. Because transparency, honesty, confidence, all these things matter and they're important. And you just want to make sure that you're demonstrating that as you're building this network. And over time, if you're prepared and you're meeting the right people and you're chipping away at this thing, it'll happen. You'll have the network that you need to raise around. So those connections will be there, but it's just a matter of, okay, once you have that network, once you captivated them, how are you staying engaged, and how are you showing folks that you're moving in a direction that's going in the right way in terms of growing your company. So just things to be mindful of. And I would also suggest looking to see like what your city has to offer where you're at, what your region has to offer, and then also sometimes it makes sense to go to another city, see what they have, network there, meet folks there, especially if you feel like you've really grown your local network and your regional network, and you pretty much met everybody you need to meet, you made good connections there. Then it's a good time to branch out into some other places as well. So, yeah.
Yeah. I mean, definitely agree to all those points, especially with being prepared, right? And like harping on the if you don't know the answer to something, then don't lie, right? I mean, that's the biggest thing is people will be able to smell that a mile away, even if you think that you're dazzling them with your BS. Like the data is going to be readily available when they go in your data room and see all this other stuff. Like they're going to be able to tell whether you're BSing them or not, like to a certain extent. So don't let it get that far. Be able to just say, hey, actually, I don't have the answer to that, but I can make sure that I research that and get back to you on it, right? But I tell that to founders all the time, and even with my work with Founder Institute and mentoring and stuff there, like it's funny being on the other side of a lot of those things and helping out founders as I'm going through their decks. And I'm like, once you actually experience that and also do things on the community side and just get more active within the startup ecosystem, you'll be able to know what questions will come at you because you're working with others and kind of seeing what things that they're talking about or what things that they've experienced. And also it just comes down to, sometimes volume and practice in that regard as well. It takes usually over 100 conversations for you to get your first check and everybody will tell you that. And so like, don't feel bad if you're on conversation 20 or 40 and you're like, man, like, I don't know, like I'm not getting anywhere, because you're able to answer the questions and kind of see, okay, what are the recurring factors and like, where are people dropping off or like, where are people tuning out? And then fixing that portion of your deck, your like how you're articulating some of your answers. And really also, if you're going to get the same question over and over again, adapting your pitch to where, you can talk about those things as you're going through. And that's really something that a lot of founders, it takes experience to do it, but you don't necessarily have to like learn from everybody else's mistakes in those regards. Cause I think for most founders, like this is my third startup. I know I've made those before and I've learned from them, but if you don't have to make them, then don't.
Yep.
Yeah.
Absolutely.
So into the next topic of, identifying committed investors. So how important is it for underrepresented founders to identify and target investors with a genuine commitment to diversity? And what are the best ways to connect with those individuals?
Yeah, I think it's important also just to take a step back and focus on the fundamentals of venture capital, right? Even if you are targeting working with investors that have a thesis of supporting underrepresented founders, typically the rationale behind supporting underrepresented founders is that here's this pool of talent that is underserved and overlooked, and there are all these great opportunities in this pool, but the venture capital has not caught up to finding this talent, developing it, and taking advantage of the fact that, hey, there's this whole segment of the founder population that, if properly capitalized, can create some really amazing, great businesses. And so with that being said, it really does come down to your business. It's not necessarily about finding folks that support underrepresented founders in a way that is like, hey, this is what we do, right? This is exactly what we do, because there's only but so many firms that do that, and you don't want to just focus your attention and make your strategy about reaching that handful of firms that do that, right? You want to try to appeal to as many right fit investors as you can, and that's just going to come back to the business itself. And typically at this early stage, when you're raising a pre-seed or seed round, a lot of the focus comes back to the team. A lot of the focus comes to, okay, well, who is this founder and who is on this team, and why do we think they have an unfair advantage at what they're trying to do? What is it about their background? What kind of connections do they have? Have they had any successful exits in the past? Do they come from a pedigree of expertise within the problem that they're solving? And so when it comes to making these decisions, it really does come it comes back down to the fundamentals of the business itself. And so some of the hurdles that can come with making these relationships in venture capital, which I think has changed as an industry, still needs more change. There's still more work needs to be done in terms of democratizing the access to capital, because what ends up happening a lot of times is as a VC, you come from a network, right? You've worked in Silicon Valley. You may have went to maybe one of the top 5 Ivy League schools. And so you have this network of folks that you know who are talented, have expertise in what they're doing, and you know them, right? So when it comes to making investment decisions, typically you end up working with your bubble because you've de-risked that bubble by knowing those folks over an extended period of time, seeing what they were able to accomplish and achieve. And so when you're a founder that doesn't come from one of these networks that the VCs have already built, that it just really becomes about creating a persona, whether it's online or through being active locally in your ecosystem. It's about creating this persona of being de-risked. So, and being de-risked means allowing folks really to get to know you and get to know what you're building and what you're doing. And that takes time, that takes patience. And that's why you want to do that before you even start fundraising. And again, if you have a really great idea, and what a great idea means in terms of VC, if you want to go that route of raising venture capital, what a VC is going to ask themselves when they make this investment decision is, can this investment return my fund? So if I have a $50 million fund, do I think we're going to get an exit that's going to be worth $50 million based off of our investment in this company, right? And so that's a very challenging thing to accomplish for a lot of companies out there. It typically takes you solving a really big problem within a very large market. Large is $1 billion or more, right? $1 billion is on the very low end of that, because you got to get a certain market share of that market. And typically, if you're a really great company, you do everything right, you execute, and you have just the top talent out there, 5 to 10% of a market, if you can capture that, then you've done excellent. And that's why the market needs to be a certain size, and the team has to have a certain level of meaning, like it's very hard to duplicate what you're doing. It's very hard to duplicate your team and the type of opportunities that your team can create. So it does come back to those fundamental aspects, and if you have those fundamentals down, and targeting folks who want to invest in underrepresented founders, that's going to give you the highest probability of getting an investment from those type of investors, then it's also going to give you a good probability of being invested by any investor who even if their thesis is not trying to tap into the talent pool that is currently being overlooked by VC.
Yeah. I mean, yeah, that's a great explanation of, essentially how to really identify a lot of those factors out there. And also, I mean, we're talking about VC right now, but there are, alternative forms of capital. And like VC isn't just, one size fits all as well. I mean, there's also, corporate VC. And really, there's like over 60 different forms of capital that startups can take on. I think that we always talk about the venture capital side of things because that's the most prominent and I think the one that everybody sees the most. But it's also, just to let everybody know, it's not the only thing that's available to you, which is, we highlighted a little bit of that earlier of, seeing what your city has to offer and seeing, there might be grants or other opportunities out there for us as underrepresented individuals as well. And so to go into the next portion of that, actually, I kind of want to highlight this portion and we'll go back into the next portion, but I was already kind of talking about it anyways. So should founders, of color, women, basically everybody in the underrepresented categories, tailor their pitches to the investors that they're speaking with?
Uh, that's I think it depends on what exactly you're tailoring, right? Like your value proposition is your value proposition. Your team is your team. The market size is the market size. So there's certain things that you really can't tailor. It is what it is. It's just about, hey, this is my business. This is the opportunity. This is the problem that we're solving. Um, what you could do is if there's a certain focus that investors have, and you can typically find that out by talking to their portfolio companies, and just getting an idea of, hey, what was the process like? What did they focus on? And so in terms of focus, if like, for example, you have an investor that really cares about the financial projections, right? They want to really get to see how you as a founder think about the financial aspect of your business. Then you may want to prepare extra slides for that. You may want to have, your unit of economics ready to go. So that's how you can tailor your messaging based off of what needs to be focused on. You can't always do that because you may not get an opportunity to talk to a portfolio company that's raised money from that firm. So what's generally useful is if you're just almost ready to answer any question that can come your way. And that's a tough task, but it's doable if you really put in the time to prepare and just come prepared to talk about anything. And then that way you got your bases covered. And again, it does take a lot of time, a lot of preparation, a lot of practice. So make sure you make the time to be ready for that moment when you are presenting. But again, not much of the information itself is going to change based off the investors that you talk to, but it's more going to be about like what do you focus on? What are we going to be talking about during this meeting?
Yeah, exactly. Like it's more of that like storytelling and narrative piece, which I mean, we've been focusing on a lot more even for our pitch. Like the product hasn't changed, like in any semblance of the word as we've been building out. Actually, I mean, I thought that it had because of how we've been telling the story, but then I looked back on previous documentation that we made, 12 months ago. It's the same business. It's the exact same core elements. We've actually, with the customer feedback that we've gotten, like we were actually right on course, right? With at least this current iteration of what we're doing. But like it's how we're framing things and how we're getting people to see that vision, especially with things, being pre-launch as well for us. Like, why do people care? What is that value proposition? And like, it's going to be different even for potentially your customers versus the investors as well. Like how you're pitching the sale of your product is going to be completely different than you like in that VC meeting where like meeting basically 1 through 3 or 4, or however long it takes to get that check. Like it's just a different level of conversation. You're not trying to hard sell them. You're trying to get them to buy into not just like the product, but like the business, your team. And like, is this going to be around in 5, 10 years? And are they going to be able to get a return? Right. Like your customers, they might not care about a return depending on what you're building or whatever else it is. They're just trying to get their problem solved. And if you solve it and they're willing and able to pay for it, cool. And so it's also evaluating a lot of that stuff, just like you highlighted, which is fantastic. And so let's lean more into the mentorship and partnership side of things and leveraging that. So, what role do strategic partnerships and mentorship play for underrepresented founders, and how can they use the resources that are available to enhance their visibility?
Yeah. So that first part of the question, strategic partnerships, is really how a lot of businesses are able to grow, right? So if you're um, if you're building out your distribution channels, if that's also building out your marketing, your advertising channels, uh, having those strategic partnerships where by us working together or aligning our efforts, it benefits both parties. There's a lot of ways that you can go about doing those strategic partnerships. What I recommend to really get a clear picture of who those strategic partners should be is you may want to do what's called a business model canvas. Most entrepreneurs have heard of that. It's really helpful. It's a really helpful tool because then you have a visual of all the aspects of your business. And then you ask yourself, hey, if I outsource this, or if I had the perfect partner to help me with this, who would that be? And who do I know within my network that can help me with achieving that? And then, it's not just, in your head, it's something that you visually have, you communicate with your team, and then you can organize your team's efforts around managing, developing, securing those strategic partnerships. And so I kind of already touched on the visibility aspect of your question, but I think what can really help with your visibility is going to events, doing things that demonstrate your subject matter expertise. That the networking helps a lot, but then also it's like making those personal relationships. I think is very important as well. It's like it's not just showing up at organized events. It's like, hey, meeting folks, and if you genuinely mesh, saying, hey, you want to go grab some coffee or something, or it's not. Yes, you are as the founder, you're actively working towards growing and building your business, but if you can build genuine, authentic relationships with folks, just through lunch or coffee, and ask for, maybe you want to ask for some mentorship or, not even, it doesn't have to be that formal. It could just be like, hey, when I have a question, I just reach out to you and ask you, do you mind? Things like that, where it builds those relationships. That can also help with visibility because sometimes it's not necessarily about having 10,000 followers or whatever. Like, all right, great, that's great that you have 10,000 followers, but out of that 10,000, who are the people that can actually help you? So it's really about finding those relationships that are going to help get you to your milestones. And so I think with that also being said, if you know your milestones and what those are, you reverse engineer for that. You say, okay, if I know I need to be at 10,000 customers, then what relationships do I need to tap into where they can put me in front of enough folks so I can hit those numbers? It's just about thinking like that way. So when you really know your goals, you have your milestones set out, you have your business model canvas laid out, and you know all the components of your business. Then you can really make informed decisions on who you're going to spend your time with, cultivating relationships that are mutually beneficial. I think that's very important to keep in mind. You know, strategic partnership, it should be about giving and receiving, right? So making sure that it's a two-way road where you're offering value to them and they're offering value to you, and together it's a mutually beneficial relationship. Then that's going to take you really far. That's going to give you longevity. It's going to give you a great reputation amongst folks. And then I think it's also important that when someone does help you or offer you advice, really take advantage of it. Like really do it. Most folks will look for that. Like, hey, if I'm giving you advice or trying to help you make connections for you, like if you take advantage of it and you really do well and it helps you and you're growing and the person that give you that assistance can see that it helped you and you took advantage of it, then they're going to be more inclined and more motivated to want to continue to help you and see you grow. So make sure you're taking advantage of the advice and the resources that you are getting. Um,
Yeah, no, perfect. And so I know we highlighted a little bit of it for alternative funding sources or forms of capital, and it can come in various different shapes and sizes. But, what are some of those alternative funding sources that you might be able to highlight on, like how founders are able to find that outside of traditional VC, like, the grants, accelerators, anything within the non-obvious realms, or even just some that you've had experience with?
uh, Great question. So I do have a background in community banking. So I've helped businesses with getting loans, and I've helped with some grant programs as well. So outside of VC, I have done some other forms of financing for small businesses, and so I would say it's definitely a better route to go for the majority of businesses to try to find some funding source outside of just VC. VC may be a component of what you do, but there's all these other funding sources out there. So I think one thing that's important to keep in mind as a founder is what is your cost of capital, right? So certain forms of capital are going to be just too costly and expensive, whether it's very high interest rates or having to give up too much ownership of your business. And so you just want to be cognizant of when you're going for these different forms of financing, what's going to be the cost to you? What do you have to pay back? So with that being said, of course, everybody loves grants because you don't have to pay them back. But typically, what comes with getting a grant is there's typically a reporting requirement. So the the funders that have given you a grant, they may have received that money from a government entity or something like that, and they are beholden to reporting the impact metrics that they were able to achieve through giving out those grants. So, just because you received a grant doesn't mean you don't have any obligations. There's typically, again, that reporting obligation. You may have to relocate to a specific area. So just be aware of that. And then also be aware that, because grants are, money you don't have to necessarily pay back, it's a very competitive space. It can be very hard to gauge how do you give yourself the best opportunity to secure those grants. the process for allocating those grants can be, it can be a little esoteric. It could be just folks who are reading applications, and typically there's an influx of applications. There's more applicants than money to go around, and so it can, your ability to control how you're going to get those grants to fund your business is challenging, because there's a lot of factors that are out of your control. And so with that being said, grants should not be the strategy in which you're going for to raise your funding that you need. It's icing on the cake, right? It's great to have, nice to have, and you can win a couple of pitch competitions and stuff like that. Like, that's awesome, but that's not the way to go to say, hey, for sure, I'm going to be able to get the money that I need for my business. Because it's just so all right. So grants, and then we're going in order of cost of capital here. So next would be loans, and there's two type of entities that will give a small business a loan. There's traditional banks, so that's PNC, Bank of America, those large banks that have a national or large regional presence. Traditional banks are tough to crack, because what you typically need is 2 years of profitability, and the bank is going to make a decision on giving you a loan based off of your ability to pay that loan with the profit that your business is making. And so if you don't have enough profit to make those monthly loan payments, and it's to a certain degree, typically it's like, it varies, but typically your monthly profit should be about 2x what you're looking to borrow. So if your loan payment is going to be $1,000 a month, you need to have $2,000 in monthly profit on average. That's just very high level. There's a lot more factors into it, but just trying to give you a high level understanding. And then so there's traditional banks, and their standards are going to be higher, right? Because with traditional banks, that money belongs to their depositors. There's a lot more regulations on their end, so they can't be as flexible as possible when working with a small business. They do have criteria they need you to meet. Now, if you need someone who's going to be a little bit more flexible, a little bit more small business friendly, community banks were created for that reason, because they're going to be the ones that can do the deals that the traditional banks, because of the regulations and the requirements they have, they can't do those type of deals. So community banks, because of their sources of funding, they're able to serve the small businesses that are just not quite ready for a traditional bank to fund them. And so working with with a community bank, again, they're going to have some flexibility. They may not require necessarily for you to have a 2x profitability, but that still could be a requirement. However, they may put you into a technical assistance program so you can really master the fundamentals of managing your business, and in that way, that kind of de-risk giving you a loan if you're not quite, from a numerical standpoint on your finances, you're not quite fitting all the boxes that need to be fit. You still typically need to have 2 years of tax returns. There are business loans out there for companies that don't have that yet, which is the majority of startups. But typically what you'll have to do as a startup, if you want to go the route of getting loans, you got to show some type of revenue, right? That is consistent. And it can be hard when you're developing your product to bring in some consistent revenue that's at a level where a bank can give you a loan. And so what you should do is diversify your revenue streams when you're just getting started. When the product's not ready quite yet, you're still building out that sales pipeline. Diversify your revenue stream by doing some other things that can bring money into the company. It typically looks like doing consulting which can be a great segue to being able to then to sell your product thing with. Um, these other revenue streams that you're going to do, they should be relevant to the product that you want to develop. It shouldn't be like, hey, if if I'm a SaaS business, like making money doing vending machines or something like that, like what does that have to do with your business? Because again, the underwriter, the person who's going to be making the decision on whether or not to give you this loan, they want to see everything that you do. And if you're making money, but it has nothing really to do with the expansion, which is typically, okay, we have this product now, we want to expand into the market with this. If those two things aren't related, then it becomes harder to justify giving you the loan, right? Because it's like, okay, now you're doing something totally different that you don't have an established reputation doing. So, again, that's just some high level information about going the route of getting a loan. I would say this as well as so if you're going to go for loans, then you're building your business differently, right? You're building your business more disciplined in terms of the financial management because you got to get the profitability in order to pay off those loans. So it's different model than getting some capital, going out and using that capital to grow your business, waiting for the revenue to catch up. It's different. So there's that. And then I would say also there's lines of credit. So a line of credit though, lines of credit should be used. Lines of credit are like a credit card basically for a business. And those can be used, but they should be used for temporary things that you can pay right back. It's not going to drag on for long. Like let's say for example, you got a gap between when you get paid and when you have to make payroll. So if you know you're going to get paid, but it's going to come after your payroll, a line of credit can help with bridging those needs for capital when you have those crunches. So you should maybe consider getting a line of credit. So when you need it, you can tap into it, but it's also about putting it right back as soon as possible. It's not a long-term financing my business type of thing. Lastly, I'll say this. So there's a concept of financing called factoring. Factoring is when you take your accounts receivables and you sell them to a financial institution that does factoring, and they give you a percentage of your working of that account receivable, and you use that money that they give you as your working capital. Typically, businesses that try to get factoring is because they need some money, they need it quickly, they're kind of in a bind. And the dangerous part though about being in that situation when you take on factoring is it can become a pretty vicious cycle because the interest rates a lot of times with factoring are so high, higher than credit cards. And because those interest rates are so high, your monthly payments are not really making a dent into the overall balance. So it can become this cycle where you're constantly paying this thing, constantly stuck. And then you're constantly in a cash position as a business where you got to keep using this factoring because it's all you can get. Typically, if a bank sees that you're doing factoring, they'll kind of steer away from the business because it indicates that there's some cash flow issues going on. And because the interest rates of factoring are so high, the banks could be like, well, it's going to take you a long time to pay that off if you don't pay it off. If you don't have enough money to just wipe that balance out. So it can make it difficult for a bank to give you a loan if you're, taking on a certain amount of factoring where it kind of makes the numbers hard to give you a loan. So just keep that in mind. I often tell small businesses to avoid factoring if you can, to the best of your ability. And then again, so folks may want to. That's debt. So then there's equity now. And then there's typically two types of investors. There's angel investors, there's institutional firms. So we said we're not going to focus on the institutional firms. So the angel investors, what they're typically looking for is, do you have some form of traction? Have you developed a product? Have you tried to get some revenue yet? Do you have a wait list? Things of that nature. And then you as an entrepreneur, they're going to look at you, want to get to know you. A lot of times with angel investors, if they really like you, they like the idea that you're working on, these high net worth individuals, they can write you a 10, 15, $20,000 check. And so if you go that route where you get those folks to help you out and invest in your business early, that could be a great strategy for raising that initial amount of capital that you need to just start to get some things done. And then once you're able to get some things done and you've made more traction, then you can be in a position to work with institutional investors.
Yeah, no, that's fantastic. Yeah, that was a really great explanation, and I tried to put it in the chat here, but my internet is starting to hate me for some reason. But Mogul Millennial is also a really good company to look at for anybody that's looking for grants or anything. So they're focused on helping underrepresented individuals with finding grants within the startup ecosystem, and so highly recommend anybody that's watching that needs any of that to jump on and actually review some of the stuff that they have on their site. And yeah, I know we're running out of time here, so let me do one final question. Maybe we can get another one in for the investors, because I know I want to have a couple in there, but this might just be a founder only webinar that we had here. But for the resilience against systematic bias, right? And we've kind of talked about a few of these things already, but I really want to talk about this specifically for how founders can maintain momentum and confidence. And also this can even stem for VCs too, if you want to talk about even your experience with this, but maintaining the momentum and confidence despite the systematic challenges that we're experiencing, such as potential bias or discrimination within this space that, we all might encounter.
Yeah. I think, part of the human experience is we all run into obstacles. We all have challenges with trying to achieve something. And then there could either be people or circumstances that are in the way of achieving that. And I think the way that you can persevere and maintain your morale as you're navigating this space is really get to know the people that you're working with and get to know the investors that you are reaching out to. See what their portfolio companies look like. Talk to those folks. Get to know, like, hey, what was it like working with this investor? Because it's also about finding people you like, you could work with. You think this investor is going to be great for your business. They can make you connections to customers. They can make connections to other investors. They have expertise in operations. Perhaps they were entrepreneurs themselves in the space that you're in. So if you really find those type of investors that you think, hey, I'm going to resonate with this person, we're going to really get along, then I think that'll help save you from dealing with folks that you don't want to deal with, or dealing with folks you feel like person's not on my side, and for whatever reason. So I think it's just important, again, get to know the investors that you want to work with, and then also just back to having that support group of folks and building those authentic, genuine relationships where it's just about, hey, I just genuinely want to be supportive and here for you. It's not necessarily about, what I think this person can do for me or do for my business, but more or less like, if you just have those friendships, I think that goes a long way. We as human beings are naturally social creatures. We do need that level of belonging and community, and it could be good to have other things going on in your life that are more than just your business. Yes, as a founder, your business is going to take up a large part of your life, but it's good to have other things going on that make you happy, give you meaning, and give you fulfillment in life outside of just having your business.
Yeah. No, 100%. And I've talked a lot about that with founders that I'm personally friends with, and as I continue to network in the community, because you know, at the end of the day, your business takes up a huge amount of your time. But I think it's also a part of like the being sane factor of everything. And you can't let it take up 100% of your time. Like there's like that's a very unhealthy, and there's no like you'll end up getting burnt out faster than anything else, and that's just not constructive for the business. And so being able to take time to hang out with some other people, or do what you enjoy outside of what your company does. Granted, most of us are probably going to work crazy hours and do a lot of extra legwork, but being able to find time for those other things is also just as important. Especially, you might not even realize what things you're missing out on or putting off or like leaving off the table with your business if you're only focused on doing what's within your space. Like I've actually met a crazy amount of people that have helped out, my startup or other startups that I've consulted with or worked with over the years, simply because, I just happened to be at the movies one day, or happened to, go to like a golf tournament or something. And it was just completely separate from the ecosystem. But I've helped people get funded that way. I've helped people to, get strategic partnerships that way. There's a variety of different things that can come from, taking a step back. Sometimes it's difficult, even when those things happen. It got to the point, even for myself, where I was like, man, like I really can't get away from this business. Like every time when I go out to hang out with my friends at the bar or something, I'm talking about about this company or doing whatever. Sometimes it'll end up that way, but those weren't planned instances, and some of those people actually ended up becoming founders themselves and are actually kicking ass right now too. Where I was just like, well, what do you do? Well, I do this. Oh, how'd you get into that and all this other stuff? And so you might end up sparking somebody else's vision just by you having a simple conversation, outside of working hours, right? And so, yeah, I mean, we're almost at time here. I want to make sure that we have time to wrap everything up and respect your time as well. But yeah, I really want to thank you for coming on. We made it through basically all of the founder questions, but we do have some VC ones, so maybe we might have you on later. Actually, I might even do a panel format for that if you're up for that at another point later on this year. But yeah, it was fantastic having you on, man. I really appreciate you taking the time out, even when I've hit you up for other things with our company, as well as for you sharing some of your really intricate knowledge with the community for us today. And yeah, do you have anything that you want to plug, or different ways for people to connect with you after today's session?
Uh, yeah, so if anybody wants to get in contact with me, Gabe, I think you put my LinkedIn in there. Please send me a message. When you send me a message, let me know how you found me. So if it was through this webinar, please let me know. I try to get in there as much as I can. Then we can also be reached at Bronze Valley. Just go to our website if you want to be considered for investment. You can go to our website. We have a link to our intake form. You can fill that out, and then one of our analysts will get in touch with you. Yeah, okay, cool. I see my LinkedIn right
Yeah,
there.
yeah. I'll make sure I put that on there. I can also show the Bronze Valley link really quick here. Just bronzevalley.com for all you guys. Very quick and easy.
Good, good. Awesome. But no, Gabriel, I really appreciate this. Thank you for giving me the opportunity to speak with everyone.
Yeah, of course. And no, I really truly appreciate you for coming on. And I'm even going to rewatch some of the stuff to make sure that I take my own notes because you gave some really valuable information, especially on the like the alternative funding side, because there are some things that you highlighted that I hadn't even really thought of myself that I've done with other businesses in the past that might be very interesting for some other people that are fundraising right now and might want to have some alternative forms of capital to consider for their businesses. And so, yeah, like for Founding Titans, once again, we're creating a community focused relationship optimization platform, really just melding social networking with personal CRM capabilities to be able to help founders with finding the right connections and resources for their companies. We already have 19 partnerships ourselves. We have a couple of communities that have already signed LOIs, as well as an accelerator, international accelerator. We're rocking and rolling. If anybody wants to talk more about that, definitely connect with me after this. I'd be happy to speak to you. Also, Gabriel at foundingtitans.com for my email. If anybody has any direct inquiries about everything, please make sure that you reach out. For next week, we actually have Martine Martinez with Founder Institute to talk about the startup ecosystem in Austin, Texas specifically. We actually had CS Freeland talking about the entire Texas ecosystem, and now we're going to do a deep dive on my city, Austin, Texas, right here. And then we will be doing one on my hometown very soon, hopefully, with somebody for Las Vegas as well. But definitely tune in for that next week. We'll be talking about everything from the accelerators, venture capital, what fundraising is currently looking like here within the city, as well as some additional resources that founders might not know about or might want to tap into within this specific market out here. And then we also have a couple of other people that are going to be coming on soon, like Global Venture Network, as well as Forum Ventures that we already have scheduled. And also Partner Track is another one that's going to be coming up pretty soon here. We're going to be doing everything every Tuesday around the same time. If any of it changes, definitely make sure that you guys are following me or have me on LinkedIn so that you can keep updated with everything. And also for our Luma calendar, you'll be able to see upcoming events there as we continue to post those. And yeah, thank you all for joining today. And thank you again, Anthony, for jumping on.